let's talk about what tomorrow may bring us. Tomorrow's an interesting day on many fronts. Interesting means it could be some good opportunities. It's likely to have some decent movement because of a number of factors. One, it's Fed Day, Federal Open Market Committee interest rate decision day. It'll be announced at 2 p.m. Eastern Time. I will close all positions prior to that. Secondly, it's the first trading day of the month. It's also the first calendar day. They go hand in hand, of course, and as one might expect, well, maybe don't expect it, it's a very bullish day historically. It's when new money tends to come into the market. Fed Day is historically very bullish as well. Now, with that said, we just closed at a new 200-day high close. I think that greatly will greatly reduce the overall bullishness. So I'm not unilaterally ruling out shorting an up gap, even though historically and independently it's rare for me to fade a gap on either Fed Day or first trading day of the month. I probably won't do it tomorrow either, but I'm not ruling it out completely. If I do, it'll be with a reduced position size. I'll be looking at the gap guides to take my cue. But let's look what I thought would be helpful, since it is Fed announcement at 2 p.m. Eastern Time. I thought it would be helpful just at a high level for those of you that are new members or are just following along to my videos to show you the results of fading gaps on the first trading day of the month when above the 200-day moving average and using a 2 p.m. close. End of day stops, of course. I'll rerun these numbers using MTG stop parameters, which is more of an intraday stop, which will cut some of these runners that run against you down. But check it out. A couple things stand out. 3-to-1 odds of gapping up on the first trading day of the month. And off the top of my head, I'm pretty sure Fed Day has a bias for gapping up as well. So you might want to look for opportunities to get along in the overnight session if that's your style or of interest. However, an up gap in the first trade day of the month during bullish markets, less than 50% have filled or were trading profitably, meaning below the open if it were an up gap and you shorted it as of 2 p.m. Eastern Time. So definitely has a long bias there, but down gaps have had some runners to the downside, even though the odds are, on a small sample size, pretty much in line with 65-70% average gap fill win rate. So I guess the key point there is don't assume that the day is bullish, necessarily going to be bullish on a down gap. But Fed Day generally is a bullish day too, so we'll see. And be a lot going on. So those are my thoughts as of right now, about 5 o'clock Eastern Time, the day prior. All right, let's look at what we showed going into today. Was hoping for a pretty good setup because the worksheets show we had a real good chance of getting a odds favored a gap down a little bit this morning, which is what we got. But a gap up met my criteria above the highs and between the high and the close. This is the average of all 8 indices from the 8 individual gap guides. This is where I always start my analysis. A gap down wasn't terrible though. Really depended on the zone because we had a green candlestick yesterday, so we could open inside the body of the green candlestick or below the open and above the low. Those are 2 different zones. You can check them out in our gap zone map. It's available on the homepage as well. So the other factors in play, day prior to Fed Day, historically has been okay for shorting up gaps. Been maybe a tad weak for buying down gaps. There's a little bit of risk factor there. It's been a money loser using our MTG stop parameters. And last trading day of the month, same. Been attractive for shorting up gaps, a little bit weak for buying down gaps. That's 2 dings, if you will, 2 risk factors for down gaps, but 2 slight positives for up gaps, and up gaps already look positive up here. Then the unfilled up gap pattern from yesterday, real positive for gaps up, and down were okay as well. So I'm going to skip looking at the individual gap guides because they were, as you would expect from these numbers, really strong. Just go straight to my comments. And last chance, the special offer ends tonight. For those of you that are members, you probably got an emailing on the trader course. You can save some money. Fantastic program. We've had quite a few people purchase this application and program. It's got the wizard in it. Position sizing comes with some fantastic videos from Tim and one-on-one time from Tim as well. Other helpful research, I looked at a bunch of things. It all was generally supportive and consistent with what we showed in the worksheet. Gaps that close at or, when I showed last night's video, at or near a 200-day high close, meaning within 5% or closing higher. pretty good in both directions, especially when it gapped up. So I was ready to go on shorting a gap up. Buying a gap down was okay, and that's basically what I said here. There were some risk factors for down gaps, as I mentioned. Gap guides overall were good. So my deal was if we get a gap down the ES that was big enough, at least a point in size, and all three other futures markets also up and down, then I would fade it with a half-size position. You had those risk factors, and my biggest concern was we were going to open with exactly a 1.25, 1.5 point gap, risking 5 points with a setup that did have some wrinkles in it, meaning those risk factors. Gap up, however, that was pretty much a fantastic setup. The only concern I had there was it was be the same scenario, risking 1.25, 1.5, correction, risking 5 points to make 1.25, 1.5 points. And I've done those probably hundreds of times, if not thousands, over the past 10 years. That's exaggeration, hundreds of times with real money, and have done well with them. I'm profitable with them. They do have some execution risk with them, and I only want to trade them when everything's really lined up well. So considering there were really no risk factors whatsoever, as long as we had at least 2 of the 3 opening up, then I was going to fade the open with a 3/4 position size, which is more or less a full position size. Again, the primary reason it wasn't full because it was the tiny gap size. And the complexity of making sure all these features were gapping the same direction too. That had a little challenge. So unfortunately, markets melted away into the open, and we did not end up with tradable gaps. Small gap up in the Russell, small gap down, unfortunately. In the ES, small gap up. The white line is the gap up. The blue line is the prior close. The white's open, blue's line prior close. Gap up in the NASDAQ, and sizable gap up. Whoops, that's yesterday. Goofy. Hold on. Sorry. Small gap up in the YM. Sort of interesting. There you had 3 markets gapping up, only 1 gapping down. But again, that's why I won't trade. While technically this gap filled, the problem with those other markets gapping up, the S&P is the big daddy. If it starts, if these markets start selling off to fill their gaps, then you're going to have downward pressure. So as it turned out, it sold off all the way down to that green line right there. That's a high of 2 days ago. This was the UCO heat zone gap. And for you that have gotten my DVDs or seen in the members download area, I've written articles on this as well. Often buyers will show up right at the highs of 2 days ago. That's exactly what happened. So this is yesterday's candlestick. We gapped down barely inside the body of the red candlestick. And the high of 2 days ago is the key support area. And it held like a brick wall. Now, unfortunately, we had so much volume here. And it was last trading day of the month. We ran some data that showed last trading day of the month can be weak. So our guides came out, and they actually favored on the 15-minute guide the low fades lightly. It was about half of them favored and half were neutral. It wasn't compelling, so I probably would have passed on anyhow. But the last trading day of the month kept me on the sidelines, and I think that was a good decision as it turned out. The low fade was also favored by the first hour ranges. You'd had a tough time getting filled. Again, it was not a compelling setup in my mind, so I passed on it. And we rallied pretty much from the lows. So the bull market just remains intact. Now we showed some data that wherever the market was trading at 3 o'clock, I showed this data in the trading room. At 3 o'clock, either above the open or below the open, would be the direction to trade it into the close for anyone looking for end of day buys. We run those often. I run those tests in the morning for our members, and it had a long bias above the open. I've already gotten one email from somebody who nailed it into the close, was happy about that. And if we'd been down though, it had a clear bias to the downside. So I did not trade the long side. This wasn't as compelling as the one to the downside. So I did no trades. So there you go. That was my day, and that is the wrap for Tuesday, April 30th.